Sergey, the insurance markets for auto insurance are scary. Consumers are suffering under high inflation. And now their auto insurance rates are going up 22% year over year. What's causing that?
You're right, Grayson. The insurance costs keep going up for personal auto insurance, also for commercial auto, but we believe less so. It's all driven by increasing losses and increasing cost of repairs. As insurance companies have to fix those cars, the parts becoming more expensive. The supply chain issues, obviously, they're at play. And people are upset primarily because insurance is a top 3 expense when it comes to vehicle ownership. So you have the vehicle itself, then it's maintenance and fuel, and then it's insurance. And when insurance starts to become a bigger portion of your expenses, that's what's driving people upset, primarily because insurance is not tangible. It's something that you utilize only when you have an accident, and most of the insurance policies don't have an accident. That's why people have a hard time wrapping their heads around how they're going to go about this. Anecdotally, I know people in New York and New Jersey area where we're located that were just said that, hey, I'm not going to have this truck because this truck costs $5,000, $6,000 to insure, the personal truck, like Ram or Ford. And it's crazy. I think we're at the point when insurance cost actually influences vehicle purchasing decisions.
We're seeing that. Kelly Blue Book data has really interesting data. They said over 63% of the individuals they surveyed have seen their insurance premium go up over the last year. Kelly Blue Book is further considering and estimating another 7% increase in insurance premiums. And I saw some data today from Cox Automotive. Consumers are just turning back their leases and say, we're done. We're not paying the insurance, turning the leases over. When does the consumer scream uncle and say, no more, we're done, we're not going to pay it?
I think it already started to happen. Anecdotally, I've seen people like this. And I think the way we're going to see this through numbers is when vehicle sales start to decline, not in any particular segments, but overall, or they start growing slower than originally anticipated. And then people will start looking for alternative solutions. And there are not that many. You can use the mass transit, and in some areas like LA, it's really hard to do that. But the next alternative that's coming up would be self-driving service, robotaxi service. And I think the insurance industry will be one of the reasons why autonomy is going to get adopted faster than otherwise. In other words, insurance can help get more autonomous vehicles on the road faster. And that's just pure economic decision. We just need to get there from the autonomy side of things.
We're going to get there. That's a real interesting statistic that you believe that it will drive the adoption of autonomous vehicles. I agree with that because it's a fixed cost. It's not a monthly cost, and you're getting value for it. When you pay for a ride in autonomous vehicle, you experience it every day. But before we get to autonomy, there's this little company out of Fremont, California, Austin, Texas, that I'll say the word divided. You either love it, you hate it, or you're indifferent, or you just don't know what's going on and you think that Elon's crazy. But either way, he's disrupting markets. He disrupted the electric vehicle market. He single-handedly, Tesla built it. Now I look at all these different various permeations inside of Tesla. Does Tesla go and disrupt the insurance market? I ask that with the backdrop. Tesla currently offers insurance in 12 of the 50 states of the United States.
Well, I think the answer is yes and no. So when it comes to yes, there is a lot going on with Tesla. We're talking about lower cost EVs, the new model, and actually the existing models, I think, with the credits. If you especially look at the aftermarket, they're already somewhat in the affordable range within the median price of an average car in the US, which is, I believe, like $30,000 to $40,000. And then, of course, the FSD launch, which got everybody watching. And I think both the lower cost EVs and FSD will have quite an impact on insurance, especially on the cost of it. And when it comes to Tesla, Tesla will not necessarily disrupt insurance, meaning it's not going to change what insurance means and what insurance does, but it's going to change how insurance is done. And I think when it comes to Tesla, insurance can help Tesla drive further adoption of EVs and self-driving software, self-driving solution. The tricky part there even for Tesla itself is that it has never happened before. So you haven't really seen an autonomy play at such a scale, and it's not easy to model out how insurance is going to play out. One thing we know for sure is that if I have an electric vehicle and its vehicle is self-driving, it's going to be different performance metrics that I need to evaluate for compared to human drivers going on gas cars. Now, how this is going to play out, it's yet to be seen. The ideal situation is that insurance cost is going to go down, primarily because automation will eradicate a lot of the human mistakes on the road, so lower accidents, and EVs are eventually going to be cheaper to repair than gas cars. That's what we're going towards. Are we going to get there in a straight line? We cannot tell, but that's where we're going to get.
Does Tesla's data and real-time data, historical data, give them an advantage when it comes to pricing the insurance premiums. Right now, with the human-driven Teslas, on average, the Tesla insurance is 20 to 30% cheaper than your average auto insurance. That's a big difference, especially in this economic climate.
I think, yes, definitely advantage, definitely. And it's not just the advantage when it comes to the driving behavior of Tesla owners. And I know you can opt into sharing your data with Tesla, and it can give you back recommendations how you can improve your driving, the safety score. So that's only one part of the equation. Another part of the equation is the vehicle itself, data about the vehicle itself. Repairs are a meaningful component of the insurance costs. If you have a legacy insurer that has to work with third-party repair shops and they don't know how to repair electric vehicles or Tesla vehicles, and it's very hard to get parts or the supply chain is not there, Tesla will have an advantage because they can repair vehicles in their dealerships that they, by the way, control. And they already have the parts. So it's just a matter of getting them at every single dealership and then changing there on the spot, which they have the expertise to do. I don't know exactly, but I'm pretty sure that was a meaningful component to the 20 to 30% average reduction compared to the market. And on top of that, you have the driving behavior. And now with the FSD launch, it's also going to be the automation features. So when you have lower cost to repair EVs, when you can control the human driver and you can enable human driver with full self-driving features and you have data about all of that, this is definitely going to bring the cost down. However, if you look at the Tesla's insurance performance, they released a report recently. I believe they're at $500 million across those 12 states that you mentioned. And the loss ratio is 140 or so. That means that for every dollar they collect from a customer, they pay out 40 cents. So technically, Tesla is losing money on insurance right now. And coincidentally, it's also 20 to 30% cheaper. So it might be subsidizing in the short term to increase EV adoption. It might be just because they need to do a bunch of updates to their underwriting model. I don't think they're going to run this unit unprofitably in perpetuity. They're going to make it work. But right there, you can see what insurance is doing, is that there is a Tesla insurance. It's running at a loss. It's better or more competitive than the market. It's more convenient. So people choosing between Tesla and other OEMs will be more likely to buy Tesla, not just because it's a great product, but also there is less friction associated with insurance. I think that's the thinking there. But going back to your question, data, yes, data will help Tesla tremendously.
Let me throw a curveball into the mix here. There's no data to back this up. This is a theory I have. Right now, Tesla has 4.2% market share of the overall light vehicle automotive market in the United States. Put that in perspective, Volkswagen has 4.1%, BMW has 2.5%, and then you got the big boys in the 12 to 16% range, which includes Ford, GM, and Toyota. At 4.2% of the market, you have the ability technically to grow another additional 12% to get to the big leagues. What if Tesla says, you know what, we're no longer going to sell cars. We're going to do a subscription lease where the insurance is going to be bundled in along with your charging. Does that change the game? Now you're taking 14% of the light vehicle automotive market. You're taking that insurance away. That's a big chunk of the market. Does that start to disrupt it a little bit if they did that?
Absolutely. And think about it this way. We're talking specifically about personal auto insurance, which is a huge segment. Right now, it's dominated by the legacy players. So Progressive, Geico's, Liberty Mutuals of the world. And if you have an OEM, which will have a top 3 market share in the United States, and that OEM says that we are going to do insurance ourselves, and this is going to be the insurance for what's going to be a standard in the near future, meaning that it's going to be an electric vehicle with full self-driving or partial self-driving, it's going to make you worry. Because, well, how can a legacy carrier compete an OEM that produces EVs and AVs, especially if there is no data on that, and that OEM has all the data? I think the opportunity to disrupt is there. And when it comes to bundling everything in one, that's a really interesting idea. Well, first of all, it has to make economic sense to Tesla, but if we assume that makes economic sense to them, let's think about the bundle. Charging probably going to be inexpensive. If you can have an EV, and let's think a few years ahead, let's say you have a 25K EV that they finally release. And let's say on the aftermarket, you can even get it for 70, 75% of the value. Let's make it up to $20,000, maybe $17,000. And if you want to buy a subscription or lease it or finance it, let's make it, you'll probably put a few $1,000s of worth of down payment. Let's say your vehicle cost comes down to $250, maybe $300. Throw FSD on top, say another $99. Your most recent EV, probably most awesome EV, with full self-driving is under $400. If you don't figure out insurance can be as much as $400 on top. And now it's like, well, I'm paying more for insurance than I'm paying for my car, for charging, and for self-driving. Now, this is going to be crazy. Tesla has the way how to make sure that it doesn't happen. And I think that's why they started Tesla Insurance in the first place. But if you have traditional insurance companies coming to potential Tesla owners and saying that, look, we're going to charge you for insurance as much you pay for the whole thing. Of course, this is not going to work, and Tesla will have to disrupt the space. Otherwise, it's going to hurt the sales.
They're going to disrupt the space. The ride-hailing app is extremely important. So if you factor in that, let's say, Sergey or Grayson, I lease one, you lease a vehicle, and then you have the ability to put on a ride-hail network to generate revenue when you're sleeping. That's very interesting. And then especially when you make that autonomous, that gets even more interesting. So now not only are you saving money, you're making money. The vehicle becomes profitable for you. Tesla just changed the entire global auto industry. They disrupted it. And then insurance on top of it, they disrupted Uber. How does anybody compete if all the stars do indeed line up and consumers that are spending, say, $400 a month for the vehicle are making on average $600? They're up $200. It's over.
It's going to be very tough. I think the original idea that we have, let's talk about robotaxis first. The original idea that we had in the industry was that robotaxis are going to happen in commercial fleets. And I still think it's going to be the case. And you're going to have robotaxi services in different cities, and they're going to do passengers, and they're going to do goods, and maybe a bunch of other things in the future. But we haven't really thought about, okay, if I have a vehicle that I can put my vehicle on a network and it can produce revenue for me. This has never been done before. It's very important to know that this is so new that we are only as good as our assumptions are. And I think when it comes to insurance, this model, when you can put your personal vehicle on a network, there has to be some form of a switch because, well, yeah, I can own the vehicle, but technically when it's out there on the road performing the service, I am not responsible for how it's going to perform. It's going to be the software driving this or what other people do with it. So there has to be some way how you can switch between your own insurance and the insurance that probably Tesla will have to carry if Tesla becomes the fleet owner operator. That's when Tesla will need to think about moving into the commercial space and having a commercial product for the fleet that is going to operate on its network. And this product, of course, probably will have to be in-house, so working within their captive, and will most likely have to be reinsured. But that interplay between personal and commercial insurance, nobody has seen this before. So I can tell you that the insurance industry will make it work. There's going to be a product, there's going to be a solution, but how exactly it's going to look like, it's up in the air. And I'm pretty sure there is a team within Tesla that's working hard on that.
Once you figure out the insurance element, the network effect kicks in, and the network effect creates tremendous value for shareholders and for users of the service. The future is bright. The future is autonomous. The future is the network effect.